Today I'm going to talk about a simple but powerful technique that virtually every wealthy family in the United States knows. And it's something that we all can use, but I suspect there's a fair number of my viewers that don't know about this technique. Until I got into the industry, I didn't know about this technique either. And let me illustrate the strategy by asking a question. If your portfolio, let's say you have a taxable portfolio, let's say it's $1 million, and let's say that portfolio has a big gain in it. Let's say, finally emerging markets and international companies have done well. And so overall, let's say your portfolio is up 20%. So you've got a $200,000 gain. Is it possible to actually have a $200,000 gain, unrecognized gain, in a taxable account and yet take a loss on your taxes? You can, and it's a super simple technique that everybody can do. So let's keep walking and I'll tell you more about it. So this is called tax loss harvesting. And it gets that name because you're quote unquote harvesting your losses. So I chose my example carefully, right? I said, in this case, international stocks have finally had a good year and done well, but let's say the US market's actually down. So in this case, let's say you have some international ETFs, some emerging market exchange traded funds, but your S&P 500 index, let's say you're in Vanguard, it's really popular. It's a position that's called VOO, V-O-O, but if you think about the letter V, that's also the Roman numeral for 5. So 500, it's just Vanguard's way of saying, this is the S&P 500 index for them. So let's say VOO is at a loss. So overall, your portfolio is up because you had some international company exposure, you had some emerging market, and those just had a banner year. But the U.S. didn't have a very good year, and the U.S. let's say the S&P 500 was down 10% for the year. You could sell the S&P 500. Now that takes it from an unrecognized loss to a recognized loss, and if you held that position for over a year, that's going to take it into a recognized long-term gain loss. Okay. Now you can do that, and in a taxable account, it's as simple as that. You can recognize your losses and still have the gains, and the government's not going to tax those gains in a taxable account until you actually sell that position. Right now, it's just an unrecognized gain. So you could be out of the S&P 500, but for a lot of people, they don't want to be out of the S&P 500, right? So yes, you can recognize that loss, but now what happens if all of a sudden the day after you sell the S&P 500, it starts rallying? Well, first off, you've got to be out of that position for at least 30 days. It's called the wash sale rule. I'm not an accountant. I'm not a tax attorney. You can look this up though, but it's called tax loss harvesting. And the other term that you want to know is the wash sale rule, which essentially says you cannot buy back that position within 30 days, or if you do, the government's going to treat it like you never sold it. So let's say there's an ETF called SPY. I believe it's provided by iShares. And I mentioned earlier that Vanguard has an S&P 500 index called VOO, again the V for 500. So the letter V and then two O's. So let's say you sold your SPY and you're like, I got an idea. I'll just buy back VOO the next hour, and then I'm not out of the S&P 500 exposure. Well, in this example, the government's one step ahead of you. The government knows that game and says, you know what, that's substantially the same position. It's the same economic interest. So that does not qualify as a sale. So you would not be able to recognize that loss in that case. But here's the thing, if it's economically different, if it's substantially different enough, you can buy a different position that is close enough that you get some of that return of if you had not sold the S&P 500, but it's different enough. That's what you're looking for. and this is not tax advice. Again, I'm not an attorney, I'm not an accountant. You should do your own research. You should talk to your own professional. I'm obviously biased towards fee-only financial advisors. You can find one by just Googling that term. But you need to do your own research, long and short. But in this case, let's say you sold the SPY, which is iShares S&P 500, and now you want to get back into it. If you buy VU, it doesn't count as a sale, what you sold with SPY. But if you buy VTI, which is Vanguard's total market index, which would include not just the large cap companies that VU would give you, but also mid and small cap companies. Again, I don't know 100%, but I do know this is used as a classic example of how you can sell the S&P 500 and get a lot of the exposure you would have had with SPY. I don't think the government has ever said, yes, this qualifies. But I know that it's a very common example. And I think if you called your own accountant and asked, does this qualify, where I am abiding by the rule of the wash sale rule, I'm relatively confident that they're going to say yes, but again, I don't know. So that's called the wash sale rule. And so if your account is up, there are ways to actually say, oh, good, my account's up. I'm not selling those positions. But to recognize a loss in your portfolio, again, it's a relatively simple technique. You just need to know that whatever position that you're buying, to replace that position, if you want to do that, you don't have to do that. But if you are going to replace that position, just make sure it's substantially different enough that the U.S. government would say, okay, you can recognize that loss. And the way you find that out is you just call an accountant. It doesn't have to be an expensive job. You could call a fee-only financial advisor and find that out as well. And then if you say, you know what, I'm okay going 30 days without having exposure to the S&P 500. Now recognize, the S&P 500 could move up during that period of time, and you will have wished that you had captured some of that. But if you're okay giving up some of that upside, then it's super clean. You just sell the position, again, a position that you've held over a year, so it's a long-term capital loss. And you don't have to buy it back, and then it's super clean. It's a loss. You wait 31 days. For me, I might wait 32, 33 days, but it's, over 30 days is what the rule says. And then you buy it back. And when you buy it back, then as long as it's over 30 days, then everything's clean. So that's a technique that a lot of wealthy families know about. I don't think a lot of average Americans know about it, and it's why I wanted to share it with you on this channel. So I hope you found that tip helpful. If you did, do me a favor. I hope you found this video helpful as well. If you did, do me a favor, hit the like button. It really does help the algorithm find other people like yourself that information like this can be helpful for. Also, leave me a comment. I do read the comments. They're very motivational to me. We're building a great community here in our comments section. I really, really like people are taking the time to answer other folks' questions. It's a positive environment. I do want you to be careful though. And I want you to be careful because there's some scammers in the comments section. So I will never reach out to you and say, hey, I've got a business idea. I've got a business opportunity. I've got this great stock I want to tell you about. I'm never going to do that. And I'm certainly not going to do that by comments. I don't know, how I would ever reach out to anybody from my audience, but how you would know it's me and it's not a scam. I don't know. But for now, just be super careful. I don't want anybody getting scammed. What else? Let me know if there's some ideas that you have for future videos, or how I can make these videos that I'm doing currently, how I can make it better. We're growing really nicely. I have you to thank for that. Again, we're about to actually hit 10,000 subscribers as I record this. So again, hit the like button. It really does help other people find out about the channel. As the young people say, thumbs for likes, subs for love. Think about subscribing. I'd love to have you as a subscriber. And until next time, I'm Azul, encouraging you to take full advantage of the youth of your senior years. Remember, you're only young once. Use this time wisely.